This is going to be a very important and serious one, guys. Are you scared like a lot of people are right now? See, everything has a cycle, and the cycle in right now could be coming to a nasty end very soon. So would you rather hope for the best or at least try to prepare just in case? Hey guys, how's it going, and thanks for coming. I'm Nick, and this is Real Life Money, and we're just getting into it, guys. This video we're going into a possible recession in the near future, possibly in 2020. We're going to be talking about some of the causes, what could happen, how you could save money and prepare, and possibly even profit from this next recession. This could be an opportunity of a lifetime, and at the end I do have one secret that a lot of people might not know about, and this could drastically help people. The last recession actually made the most millionaires ever. So why should you be scared? Let's start there. There's always someone yelling wolf basically every single year. Since the last Great Recession, every year there's going to be another one. And it really hasn't happened. But at some point, that wolf is going to come. So what's actually different this time? Well, there's a bunch of factors. There's not just one. And some people that are trying to eye what's possibly happening are some professional investors, the Fed, other countries, and we could look at all of these. So people are expecting something. There are things that you and me could start doing to prepare. And a lot of the normal people out there don't necessarily care because they don't really have any money to lose. Well, if you do, you might want to protect it. And if you don't have any money, then this could be a large opportunity. So let's first start off with the possible causes and concerns what's going on right now. So I want to talk about the most recent things that are going on, and that's with interest rates. The most recent meeting that the Fed had, they dropped interest rates, and a lot of other countries are doing the same. There are even countries out there that have negative interest rates, which makes no sense, but it's actually happening. A bunch of people are saying there's around 15 to 16 trillion dollars in negative interest rate bonds. Imagine you giving money to someone and you have to pay them. Makes no sense. So there's not only that, but also the inversion of the yield curve. And I don't want to go too much in detail, but you can see all the times, this goes back to 70s or so, but all the times that this line went into the negative, which means shorter rates are higher than longer rates. And usually longer rates should pay you more of an interest rate because it's longer. And you can see each time this happened usually follows by a recession. And something even more concerning is a 10-year versus a 2-year. And we're almost crossing it at this point. So those might not be interesting or just the main focus of what's going on right now, but we could even see what's in front of our faces. We could see the large amounts of debts. Most people have them. You could see student loans at $1.6 trillion, credit card debts, even there's a bunch of corporate debt out there. Also, as we're talking about what's in front of our face, there are a bunch of store closings. I'm noticing them in my local area. So if you guys would let other people know what's going on in your local area, leave a comment down below. What stores do you see closing? And just to throw another chart up there, a lot of people are saying that we are at all-time low unemployment rates. Well, here's a chart that you should look at. This is a chart of unemployment, and each one of those gray areas shows you a recession. You could see that unemployment was at a low right before a recession, and right now you could see we are at a new low as well. So those are just some of the concerns on like a really simple level. So we're going to go into what are people going to do to try and save money. What are you going to do? What am I going to do to try to adapt to this new environment? Now, before talking about that, I just want to throw out a quote because I always think of this when something like this is going on. Now, this is actually a Perfect Circle song sang by Maynard James Keenan, also singer of Tool. They're coming out with an album soon. Sorry, just excited about that. But one interesting quote is eating cake in a crisis. And I feel like that's kind of what's going on. Basically, a lot of people are celebrating while things are starting to collapse. And that's what's really concerning. We're not even aware of what's going on. So these are what people are obviously going to do, ways to save money. You might be able to get some tips from this. But the first main thing, real simple to do, would be people are going to stop going out to eat all the time, or at least as often. Restaurants are more expensive than cooking at home, and during a recession, people are not going to be going out as much. Something similar, they're not going to be going on vacations as much. Vacations aren't the cheapest things, especially if you're like going to different parts of your country, going to other countries, so that could rack up thousands of dollars. So if you don't have thousands of dollars, guess where you're not going? So you might go to like more local areas or not take a vacation whatsoever. Next thing would, hopefully we're doing this right now, but obviously at these debt levels most people aren't, we'd be focusing on our debts more. All of a sudden they're a problem. So we would start at least trying to pay those down, because those are payments that we have every single month and they could eat into you and basically destroy your entire life. So people would want to pay down those debts, but along with that could be bigger purchases. For example, we're going to be downsizing houses, apartments, and even cars. So we're not going to be getting those fancy, large, expensive shelters and transportations that we're used to. We might go to a smaller house, or we might be renting a smaller area. We might be driving a more affordable car. And basically overall budgeting. You know, if unemployment shoots through the roof, incomes are going to drop, and expenses are probably going to stay the same, maybe decrease slightly, but we're really going to have to look into budgeting. So those are some of the ways that people are going to be affected, how we could start preparing of what to actually save on, but more importantly, how to set up our lives now, our money now, our investments now, and really preparing for something serious like that. Now, the first thing that you could obviously do would be subscribing to my channel. I definitely have a bunch of videos that could help you through this. Of course, there are tons of other channels out there that could help too. Now, as we're trying to save this money and doing all these different actions, what could be going on during this time, like we just said, unemployment's going to shoot way up. There could also be inflation, which a lot of people are actually expecting. And what does that even mean? Well, prices are going to increase. This could affect your pocket because prices will increase at grocery stores, restaurants, gas station. I mean, we're already seeing increases in colleges, but college could go up even more. And even any other purchases like cars and everything like that. Interest rates will be low again because interest rates will be cut. So your savings account will once again be paying absolutely nothing. For people in the retirement community, it's going to be difficult to save and have like income producing assets. Going to be struggling again, something similar to like 2008, because those interest rates were at zero. Heck, even some countries are at negative interest rates, which still blows my mind. I just heard that, I think it was Denmark, just had a negative interest mortgage. which means, hey, you go buy a house and the bank pays you to buy the house. Now, talking of professional investors, what are they talking about and what are they even doing? So some billionaires like Warren Buffett, he's hoarding cash at this point. He has a ridiculous amount of cash. Ray Dalio, he's been talking, he released a few articles out there of how to diversify your portfolio so you can save money that way. He's a hedge fund manager, by the way. Peter Schiff is another hedge fund manager. Some people do not like this guy. He's actually very interesting to listen to. He does have a podcast if you guys really want to go into learning about the economy and everything like that. So you could definitely check out his YouTube channel. And someone that I definitely would recommend is another YouTube channel that I've been watching for a little while now. Very smart person, and his name is Gregory Mannarino. He is a trader. He's been trading for decades, and every single day, right as the market opens and right as the market closes, he releases a video daily of what's going on, telling you what's happening and how to even prepare. I doubt he even realized my channel exists, but he has definitely helped me a lot. Would highly recommend his channel. He's been predicting what's been going on with interest rates and some other security movements and what could happen in the near future. Now, talking about what could happen in the near future, we're going to continue about how to prepare, and kind of going with the Ray Dalio approach is diversification. So to not only be in stocks, but also bonds, also real estate, and of course cash, which is Warren Buffett's plan, it seems, because he is hoarding a bunch of it. And the main reason behind that is to capitalize on an opportunity. If things come crumbling down, guess who has cash to buy all those things at low prices? Now, the secret that I told you guys about toward the beginning of this video is a different asset class that we have all heard of, but really haven't thought too much about it. And I've recently been looking more into this. Those other YouTubers and podcasts have been talking about it as well, and that is gold and silver. And let me show you something really interesting on those charts. So this is the price of gold since the early 70s, and you could see the run-ups it had in multiple recessions. So the biggest one, obviously, was the one in the most recent 2008, and it shot up to close to $1,800, I believe, close to $1,900 an ounce. You could see what it's been doing recently, and there is a recent climb to newer highs. It's around $1,500 an ounce, and it might be something interesting to get into because, like we said before, what could happen during a recession? Increase inflation. Other prices go up, and guess what? That's very similar to gold. Basically, it's a hedge against the dollar. The dollar, fiat currency, has been declining for decades. So when the dollar decreases, basically everything else increases, and that goes along with gold. During every recession, gold does very well because it's usually a safe haven. Stocks are getting hit, bonds could be getting hit at that point. Basically, everyone's getting out of everything. And then eventually, like the chart you saw, people flood to gold because it's the only thing that actually holds its value. Like I said before, not only gold, but something interesting is silver. So by looking at this silver chart, you could see even more drastic moves in it. So most recently, after 2008, it shot up. The highs it got to like in the 40s, close to $50 an ounce. And currently, it is at around 17. So a lot of investors would actually recommend having at least a small portion of your portfolio in gold or silver. If you're not an investor or anything, you don't have too much money, you could still buy silver. You could get a coin maybe at like a jewelry store, or something that I actually go through is JM Bullion. It's an online site that you could buy gold and silver from. If you have a minimum of $99 for your order, you get free shipping. This is not an advertisement. I'm not sponsored by them. I just like them. I've used them in the past. So you could buy like a silver coin for $20. So really anyone could get investing in this secret idea. Not really secret because it's recently been climbing once again, but once it does get into recession territory, these assets could definitely shoot up very fast. Now, a lot of professionals would recommend at least a small portion of your portfolio in gold. Some people say like 10%. Ray Dalio says maybe around like 7.5%. Peter Schiff loves gold. Warren Buffett actually hates gold because gold is basically a rock. It doesn't really give you anything. And yes, over time, gold is actually a horrible investment in a lot of people's opinion, including mine. However, you cannot deny the fact in a recession, gold does jump. And an interesting fact that a lot of people actually don't know, and I just found out like last week, Warren Buffett did invest in silver in the 90s. You could look up Buffett blip or Buffett silver blip or something like that, because he purchased a ridiculous amount of silver. I forgot the exact amount. It might have been like 90 million or something like that. He held it for a relatively short amount of time, but he did buy silver and make a good amount of money off of that. So when the idea of Ray Dalio bet on being wrong and not being right, chances are, I mean, we've been wrong in the past, and we're going to be delusional if we think we're not going to be wrong in the future. So that's why diversification is so important. Basically have a bunch of everything, because we really don't know what's going to happen. And that's the best way preparing for a recession. So hopefully this helped you guys out a bit of what could cause something like this, what could happen during it, and how to prepare. So if you guys have any questions, comments, or concerns, please leave them down below. I would love to hear what you guys have to say. And if you did get to this point, give me a thumbs up to see if it helped you out. So hopefully you're a bit more prepared than most people out there. So thank you so much for watching, guys, and I'll see you in the next one.